Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 25th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. It's an Italian bank holiday actually, so kind of, not that they're big market movers, but that has a tendency to slow things down across the pond. Here in the United States, though, we did get quite a bit of economic data. We got the Richmond Fed Manufacturing Index coming in higher than expected at 20 versus expected 18. CB consumer confidence came off a little bit, came down to 120.3, was expected to be 123.7, and new home sales shot through the roof actually at 621,000 units, expected to be 590,000 units. So really nice number there on the new home sales data point. Crude oil just off a little bit right here. It is below $50 a barrel, trading at around down about 15 cents, but right there at the 49 mark, and lockstep with this volume node here, which we would expect it to kind of settle down there. It will act as a support resistance when you get to those volume nodes. On to gold. Gold off quite a bit with another big day up in the equities. Some of them are even looking like it's a bit of a gap if we look at the Dow Jones, because the Dow Jones, I have it so it's not on overnight session as well. So this is the bonds. They're coming off as well as the broader equities are rallying, not down quite a point, but migrating back down to that point of control that we're talking about. That's where the most time and volume's been spent. This is what I was talking about with the Dow Jones Industrial Average, up another 200 points. Actually hasn't been up 200 points in since November, so been quite a while for a big, huge 200 point up day in a row. So Dow Jones just blasting higher, up above 2100 right now as we speak. So big up day so far in the Dow, but those gaps, we got to start worrying about those when we start seeing those, especially at the top of markets, because that has a tendency to want to be retraced during the day session. So we can look at, we might have to look at it on the E-mini S&Ps. I don't have it set here, but 41 points up day in the NASDAQ. E-mini S&Ps, again, they're up 15 points on the day, and not sure why the chart's not showing those, but usually have an ability to close out what's happening in the day session. But we can go over to futures. This is how it's done basically. Go down here, click off of show extended session, click that, should send it out to my platform, hit apply, okay, and then you can come up here into the styles, do the drop down extended sessions. Let's click that off just to see, and you can see there's some big gaps going on right now. So those gaps are going to have a tendency to want to get filled, especially when they're on the highs of market moves, historical highs, if you will. And the NASDAQ, we can try and show what's going on there. And this is what I'm talking about with these gaps. Actually, that a lot of times without today's market action will make that look like a shooting star, which is a very bearish pattern, but not confirmed as we popped up again today. This is the breakdown of the E-mini S&Ps, and as you can see, this is the gap I was talking about. Now that's a gap for overnight session and day session, so that just never got touched at all, which on a chart like this makes you want to believe that it is going to be retraced as well. And this is what I'm talking about with the gaps from the overnight, from yesterday's action till today's. There's another gap there, and then this gap here. So we're creating a couple of big gaps makes me a little leery when we see those kind of patterns. Onto the TLT. This is one of those trades that I actually tried to take off yesterday. I was talking about it and was able to get out of it almost right after we got done with this daily market commentary. And if you remember, I had on the 118, 128 strangle in there. Originally collected 99 cents, bought it back for 44 yesterday. So that ended up being a nice trade. Just looking for 50% of my max profit on that one, and it was achieved. With Halliburton, I took this one off today because it was in line with my 50% of max profit again. And if you remember, I had on the May I bought the 55 puts and sold the 45 puts to create a long put spread, bearishness there. And I originally paid $4.19 for that. Was able to get out of that for $7.88 this morning. So if we just kind of look at this as a ballpark, generally speaking, on debit put spreads, I'm looking to collect 50% of my or 50% the width of the spreads, which would have been $10 spread width, 45 to 55, so that's $10 wide. Pay less than $5 for that because pay less than 50% the width, and then try to capture about 50% of the max profit on that. So the 50% of the max profit would have been, let's just say if I paid $5, max profit would have been $5. Half of that is $2.50. Close out the position at $7.50. I paid $4.19, got out at $4.86, so a little bit better than what was expected there. But the reason why this worked out so well is I just got that market direction. The volatility coming out of it didn't necessarily hurt me, so that was a nice little trade there. Then on to another trade that I got out of today was XLK. This is the ETF for the technology sector, and as we know, with the talking about the NASDAQ right now blasting off and really outpacing everybody else, making another new intraday high, historical high for the NASDAQ. Technology's got to be doing well for that. And with XLK right here, I ended up selling the May 51 puts, bullish trade, and originally sold it for 30 cents, bought it back for 7 this morning. Got the volatility, the directionality, all those worked out for me nicely there. IBM and Whole Foods, as of right now, are working out nicely. If you remember, I am long IBM a little bit higher, and I am short Whole Foods stock. So they're looking like they're working out pretty decently right now. Whole Foods off a little bit, and IBM up on the day. So those are working out nicely. Friday's webinar is going to be talking about these earnings trades and how to set up different option strategies around it. We've done we're doing a 4-part series. This is going to be the 3rd part in that series. One of my favorite strategies to put on around earnings we're going to be talking about on Friday. I'm going to show you how to increase your probability of success and know exactly where your risk is when you're dealing with these kind of trades. So go to protraderstrategies.com, sign up for that. Looking forward to seeing you guys all there. Actually, sorry, that webinar is tomorrow. Today's Tuesday. We're doing this a little bit earlier because I'm going to be going out of town, and so we're going to be trying it out tomorrow. All right, so go to protraderstrategies.com and sign up for that. All right, if you can't take that, take it easy.